Good day to everyone. On behalf of everyone here at SCS Consulting Services, I want to both thank you for joining the webinar and welcome you. This webinar is dedicated to understanding the CSRD and how the new Omnibus bill might impact it. I'm your host, Bonnie Holman, Managing Director of SCS Consulting Services in the US. Before we dive in our presentation on the Corporate Sustainability Reporting Directive, or as we'll refer to it in this webinar, CSRD, and the Omnibus bill, I'd like to take a moment to just update all of you on our event platform, GoToWebinar, and let you know how you can engage with us during the webinar. So to avoid any unnecessary background noise during the presentation, all attendees have been muted, and this will remain a one-way presentation during the 30 to 45-minute event. If you would like to ask a question, please do go to the question section in the control panel, and you'll find that on the upper right-hand side of your webinar console. Once you type in your question and hit send, your question will be sent to our panel for review. Depending on the time allotted at the end of the presentation, we will make every effort to answer all the questions submitted. However, if we run out of time, any questions that we're unable to answer will be responded to after the event, and we'll do that by email. Today's presentation is also being recorded, and a link to the recording will be made available to all registrants and attendees after the conclusion of the webinar, of course. We also encourage you to provide your feedback on the webinar in a quick survey that will be included at the end of this presentation. And with that being said, let's dive into our webinar topic today. A quick disclaimer, the intent of this webinar is informational only. We are not providing any legal or financial advice during today's webinar. And additionally, it is not intended to take the place of doing your own research or advisory support towards specific decision making. So as I mentioned, my name is Bonnie Holman, and I am hosting the webinar today, and I'm very happy to be joined by my co-host, Marie Blassie, our CSRD program manager, who is based in our European office. This is just a quick overview of the content that we will be covering today. We'll just touch on who we are for just a few minutes, and then we will get into the scope of what CSRD is and its main concepts. And then we will provide a deep analysis of the Omnibus proposal, what is in it, who may be impacted, and wrap up with some practical steps to move forward. So a little bit about SCS. SCS Consulting is the dedicated sustainability advisory business under the SCS brand. Our sister company, SCS Global Services, has been in existence for over 40 years, in which time it has built its leadership around sustainability standards development, certification, and auditing. Under the SCS umbrella are also the dedicated SCS Standards Development Organization and the Global Heat Reduction Initiative, which brings comprehensive climate science and climate accounting towards slowing global warming impacts. SCS Consulting Services was launched in 2021 as a dedicated consulting business to operate alongside our certification business, SCS Global Services. We have offices operating out of the USA and out of the European Union, with myself representing the USA and Marie representing our EU office. Grown out of SCS's collective deep expertise in impact-driven market solutions, our aim really is to serve as a partner throughout our clients' sustainability journey, supporting them to create and achieve their sustainability goals, and doing so in a rapidly changing climate and business environment. So this slide really just provides a summary of our core services, which include regulatory compliance support and sustainability reporting. And of course, the CSRD really provides the world's first truly comprehensive regulatory sustainability reporting initiative. This is just a quick slide that shows the locations where SCS operates globally. Great, so let's dive into CSRD. So to put things into context with CSRD, let's start from the beginning. In 2019, the European Union adopted the Green Deal. The Green Deal really is a comprehensive strategy that the European Union has undertaken in the past years that really focuses on becoming climate neutral by 2050 while promoting a socially fair transition and supporting the transformation of the European economy towards a carbon-free economy. The Green Deal is a full program, so it touches on many aspects of the economy, and it contains a number of different laws and initiatives, some of which you can see on the screen here. CSRD is really part of the legislative package and really represents the reporting out function of the Green Deal. It literally took the European institutions years to deliver on this legislative package. Another large cornerstone of the Green Deal, the Corporate Sustainability Due Diligence Directive, which is somewhat a sister law to CSRD, was actually just adopted 1 year ago. And of course, CSRD is only a few years old itself. So the most important idea really to keep in mind here is that CSRD isn't just introducing reporting for the function of reporting. It really sits within the ecosystem of the larger Green Deal. The reporting truly aims at accelerating the transformation of undertakings and their transition within the European economy, and that of course also includes companies that represent the value chain of the European Union economy, which is why so many companies outside of the EU are getting folded into the CSRD. As such, the CSRD really is a very central component to the Green Deal, excuse me. So if we dive deeper into kind of the objectives of CSRD, we'll see that they target several stakeholders and pursue a couple of different goals. So first, CSRD, through the implementation of the European Sustainability Reporting Standards, we will refer to those as ESRS, an acronym throughout the rest of the webinar. These standards really provide standardized and comparable data. The ESRS are organized under 12 modules under environmental, social, and governance topics, and then a couple of general topics as well. The ESRS has a strong assurance requirement, which means that the data is collected, is verified, the data that is reported is verified and is hence more reliable for purposes of comparisons. This typically means that this is the data that is being consumed by investors, by banks, by insurers, and they're looking for this data to decide to make investment decisions. So in that sense, ESRS is serving a purpose of reporting for companies within public markets, but it is also extended to companies that are private. By providing a new lens, the double materiality lens, CSRD really provides a fantastic tool to identify impacts, risks, and opportunities that are specific to a company. So what do we mean by double materiality? Double materiality takes into account two different approaches, impact materiality and financial materiality. Impact materiality is looking outward at a company's impact on society and the environment. Financial materiality is looking at what is financially relevant or material to the company. By leveraging this analysis, companies have a chance to really focus in on the specific topics under ESRS that are central to their business. This really provides a chance to make better informed strategic decisions, to start transforming their business models and enhance the robustness of their value chain. And finally, the ultimate target of CSRD is to enable redirecting private investment towards undertakings better aligned with the Green Deal objectives. The target is fueled by the increased transparency and accountability and comparability of sustainability-related risks and opportunities. So that's a little bit of the objective. Let's talk a little bit about the companies that fall into scope. under CSRD. And this slide is really showcasing what is in force today, and then we'll start talking about how that might change under the Omnibus bill. But first, let's understand what's in force so we can better understand what changes. So companies covered by CSRD will have to report against the ESRS based on the timelines outlined in this slide. It's broken up by 4 waves. So wave 1 is really the wave of companies that are first in line and are currently reporting. These are publicly listed companies with 500 or more employees located within the European Union. And this includes the companies that are already reporting under the NFRD, which is the predecessor to CSRD. This essentially means that applicable companies will apply the new rules for the first time, and that is happening now. So first reports based on 2024 data are currently being published now in the year of 2025. Wave 2 is all non-listed large EU companies, so that is including non-publicly listed companies, so private companies, and it is also including EU subsidiaries of non-EU companies that meet the threshold. The slide you will see shows what the definition of a large company is, and let's please pay attention to this because it is proposed to change. So under the current definition, companies will need to meet 2 out of the 3 criteria: 250 or more employees, 400 million euro in net revenue, 20 million in total assets. Wave 3 includes all listed undertakings. So this is including small and medium enterprises or SMEs, small credit institutions, and those entities are set to publish reports in 2027 based on 2026 data. The final wave, wave 4, includes non-EU parent companies, so parent companies headquartered outside of the EU, but with substantial activity within the EU borders. This group of companies is currently set to publish reports in 2029 and based on fiscal year 2028 data. So this approach by wave is precisely what is changing. And Marie, we've covered the existing companies in scope and the thresholds, and so I'd like to pass it over to you to please explain to us the potential changes that companies currently in scope may be facing under the Omnibus bill.
Thank you, Bonnie. So yeah, well, part of the simplification, and we will have the opportunity to come back to this later, actually relates to the simplification of thresholds. So in the current version of CSRD, it could be a bit challenging to know whether your undertaking is in the scope or not, which wave it belongs to, etc. And the Omnibus makes it simpler because it moves from an approach by wave to an approach by thresholds. And there are here essentially 2 thresholds to consider. For EU-based company, the number to really keep in mind is 1,000 employees. And for non-EU companies, the figure to remember is 450 million euro revenue in the EU. So basically, if you're an EU-based company, and this could be like an EU-based subsidiary of a non-EU-based company, your first checkpoint would be the number of employees. If your company has more than 1,000 employees, then the next question will be revenue and total assets. And if you have, then you would have to verify whether your company is above at least one of these 2 thresholds: 50 million euro revenue or 25 million euro total assets. Then for non-EU based companies with significant activities in the EU, the number to have in mind is 450 million euro revenue. The second criteria is whether you have one subsidiary or one branch generating more than 50 million euro revenue within the EU. So in a nutshell, 2 figures to keep in mind based on this, what is still a proposal. And this would be either 1,000 employees for EU-based entities or 450 million euro revenue in the EU for non-EU-based entities.
Very interesting. So actually, we have just one poll in the webinar, and we'll go ahead and get that launched now. We're just seeking to understand kind of where our participants in the webinar are at in terms of reporting or planning to report under CSRD. And while we get that poll launched, Marie, so we're really seeing the simplification under that last slide, really showing moving from 4 waves to 2 types of thresholds. The threshold moving to 1,000 employees, you know, as the main threshold for reporting. Do you think that will stick, or I've heard the number 500 employees maybe being bounced around. What are your thoughts?
Right. Yeah. Well, at this point, everything is speculation, basically, because the text is, as we will see later, being discussed, and they are, you know, there are actually bodies that are fighting for lowering down the thresholds to 500 employees, indeed. But you could, since everything is open, the thresholds could also move to the top. So right now it's pretty open, but at least we know the position of the EU Commission, and you know that's this threshold of 1,000 employees.
Great. And we'll just get we'll just leave a few more seconds left on the poll. It looks like we've got about 43% of the participants having voted, so maybe just 10 more seconds and we'll go ahead and close that poll down. So with the increase as well in the revenue threshold, for particularly noting that for non-EU companies, you know, going up from 150 million euro in net revenue annually to a threshold of 450 million euro, you know, there's a significant number of companies that are now proposed to not be in scope under CSRD. I know when CSRD was launched, there was a lot of talk around 50,000 companies falling under the regulation, and now we're looking at maybe 17,000 companies falling under that. Marie, what numbers are you kind of tracking to across the different waves, and the numbers that may fall out of scope?
Yeah, well, the number of 50,000 companies in scope is the one that was broadly communicated. I think now you have to take out all the companies that would be below the 1,000 employee threshold. So probably this wave 2 will go down from 40,000 to only 10,000 companies, and you'll have to fully remove wave 3, the listed SMEs from the scope as per the Commission proposal. And yeah, regarding wave 4, so non-EU based companies with significant activities in the EU, if the threshold remain as it is, it will take the number of companies in scope from roughly 1,800 to 900. That's you know rough numbers, let's say.
Great. And I know we'll talk a little bit later on about the voluntary SME standard relevant to those wave 3 companies being removed from scope. Let's go ahead and end the poll. Sorry, I know we went a little bit further than 10 seconds, but certainly valuable to understand the number of companies across each wave that might be removed. So it looks like we've got about 30% of our respondents that are saying they will not, no longer will need to report to ESRS. 36% waiting to understand the Omnibus changes in terms of moving forward. 12% are already reporting this year, and 20% plan to or have already started their double materiality assessment. And then finally, 14% have not gotten started on reporting under the ESRS to date.
Interesting. Thank you,
Great.
Bonnie.
So Marie, can you help our audience to understand really kind of why the Omnibus bill and what it contains? I know for many companies, particularly outside of the EU, thinking of, you know, where I sit in the US, many have really been caught off guard by the proposed Omnibus bill and really some of the drastic changes that are being proposed. So would love to get into kind of why and what does it contain.
Well, I think, Bonnie, I mean, it also came as a surprise to Europe-based people and to Europe-based companies that were actually already in the process of reporting or getting ready for next year's report. So why the omnibus? Well, this is due to several factors of different natures. Well, of course, one of them would be the changing political and geopolitical landscape. That's one, and that's pretty clear. In addition to that, Europe identified a competitiveness issue, and you might have heard of the now famous Draghi report, or the maybe no less famous Europe Competitiveness Compass. And well, European leaders have reaffirmed their commitments to make the Union more competitive, productive, innovative, and sustainable. So so that's not something that came, overnight. If you look at the Budapest Declaration on the new European competitiveness deal back in November 2024, Europe committed in point 4 of this declaration to launch no less than what they called a simplification revolution, ensuring a clear, simple, and smart regulatory framework for businesses, and drastically reduce administrative, regulatory, and reporting burdens. So these initiatives are supposed to reduce the burden by at least 25%, and to generate more than 6 billion euro savings for European companies. That's what's announced. Mm-hmm. And well, indeed, despite the calls from EU institutions to undertaking, and from EFRAG as well, to act pragmatically and not get lost into the details, because well, CSRD is pretty complex, right? Mm-hmm. It has been perceived as a very complex, a very time and resource consuming text. And yeah, again, what can I say? It's not completely true. It's pretty complex. And, it clearly shows, for instance, that you would find that were disclosed by European or local entities. So I think altogether, CSRD has been at least partly wrongly pictured and communicated as just another administrative burden and another costly mandatory reporting, when actually, as you mentioned earlier, it's actually than that. Say.
Great, thank you, Marie. So clearly there's a very large rationale or argument towards simplification with the Omnibus bill. Let's get into the content. I know there's 2 bills that are being put forth here, so I'd love to understand the 2 and the differences between those.
Yeah, so indeed, the Omnibus package proposed by the EU Commission just 1 month ago, actually presents 2 separate but related proposals. And these 2 proposals will not follow the same process, and they will not be adopted within the same time frame, because they are very different in content. The first one is pretty straightforward. It's called Stop the Clock. And this one is likely to pass quickly because it creates less debate. Basically, it's not removing any requirements. It's just postponing requirements by 2 years. And it's absolutely necessary to remove the great legal uncertainty around CSRD compliance. And we've seen that in the result of the poll, actually. Companies are waiting to know what they should be doing. So yeah, on the timing, a vote at the European Parliament on this fast-track process for Stop the Clock is scheduled on April 1st. And once it's adopted and transposed into national law, it will effectively pose mandatory sustainability reporting in the EU until 2028 for companies in Wave 2 and Wave 3. So Wave 1 and Wave 4 are not in the scope of this Stop the Clock proposal. And these 2 years will also provide time to reassess and potentially revise CSRD and the related directives. So this takes us to the second proposal. It relates actually to the content of CSRD. it aims at amending several texts of different natures, among which, of course, CSRD, but also the Accounting Directive, the Audit Directive, ESRS, and this content text is likely to be a lot more heavily debated because it brings significant changes to, key instruments to the Green Deal, namely CSRD and CSRD, as you introduced earlier. And in terms of the content, I would also like to mention that EFRAG has been mandated to revise the ESRS, and they're asked to, the guidelines for their revision basically is around three main elements. So first, one very important point is that double materiality remains, and I think this is really important. It has always been presented as the cornerstone of CSRD, and I've heard it was debated, whether it should be removed from the Omnibus, but so it stays, and I think it's very good news. The sector-specific ESRS, on the other hand, are proposed to be removed. So they were anyway not disclosed yet. I think the work was ongoing on these sector-specific standards, but they will not be disclosed. There will not be sector-specific standards actually. And the last point is that, well, EFRAG is asked to adjust, simplify ESRS to enhance relevance for undertakings, and this will most likely lead to the prioritization of quantitative data points over qualitative data points.
Great, Marie. And just quickly, EFRAG, for those in our audience that aren't familiar with that acronym, that essentially is the organization within the EU that has been charged with developing the ESRS standards. So we know that the simplification of ESRS will need to be adopted within 6 months after entry into force of any revised directive.
Yeah, correct.
Yeah, and in addition to the ESRS proposed revisions, what does the overall process and timeline look like for the full scope of the Omnibus bill proposals?
Yeah, so I touched upon what would happen to stop the clock, and I think this is an kind of an unprecedented fast track process for the content, but still, it needs to go through the whole legislative process. And I think what's great about Omnibus is that now a lot of people are going to know about the European legislative process. And so we have to keep in mind that the bill will need to be adopted by both the European Parliament and the European Council. And so I think the coming weeks and months will be rich in exchanges and negotiations between the various European institutions. You have to keep in mind that the composition of the 2025 Parliament remains largely similar to the previous legislative term in terms of political forces. So one could imagine that MEPs who voted CSRD and CSRD not so long ago are not going to change their votes. However, shifts in the global landscape make it challenging to predict future alliances and the decision in which the direction, in which decisions will lean. So I think this is a complex and a tricky period because in terms of harmonization of laws across the member states, for instance, because some countries have not yet transposed the CSRD directive. So this raises the question of whether they will move forward with transposition, which I think it's pretty unlikely, given the fact that they know it's going to be amended within the next 2 years. And for companies in these member states, so CSRD is not really supposed to apply, and NFRD remains the rule. And you could argue that this situation also creates inequalities between undertakings, some having to report against very, pretty complex and pretty detailed ESRS, and having the report verified, etc., and other having to report within the framework of NFRD or not report at all. And if you add, you can add to these complexities the fact that at the same time, member states are also moving to remove legal uncertainties for their companies. And so national parliaments are beginning to take actions based on their expectations of the Omnibus package. And in France, where I am, actually, for example, a proposal is currently under review by both Chamber of Parliament that could potentially repeal the CSRD transposition decree or delay its enforcement by not 2 but 4 years. So this would potentially put French law at odds with European legislation, which is not supposed to be the case, let's say. So well, altogether, let's hope the dust will settle in the coming weeks.
Great. Yeah, the word whiplash comes to mind for me as well. So certainly, there's a lot of uncertainty around the process. And thank you so much for this great overview of the European legislative context and how it's being worked out. We want to next go into just high-level aspects of CSRD and some of the major changes. And so this doesn't really cover everything that is contained in the Omnibus bill. There's some additional proposed changes to CBAM, for example, which is another law under the Green Deal. But what we are covering on this slide is really some of the major components of CSRD and what those proposed changes might look like. So first of all, we've got, the companies in scope that we've talked about here, and really just keep in mind there's those 4 waves moving to the 2 thresholds categories, and then and really pulled together the proposed changes may end up reducing the number of companies in scope by up to 80%. So that's a significant reduction in scope overall. We've talked about the ESRS, and importantly there, Marie mentioned that the sector standards are essentially being taken out, proposed to be taken out. There's going to be a proposed reduction of the data points. There's over 1,100 data points to date. And keep in mind that the ESRS does include data points on forward-looking targets, and so that is very unique to the ESRS compared to voluntary standards. And so while it's not noted today what may be taken out, that aspect that really doesn't provide that comparability across voluntary standards, may be vulnerable to being kept in. We also have the voluntary SME standard that really is intended to be laid out so that companies that are removed from the regulatory aspect, so that wave 3 group that Marie mentioned, will still have a voluntary standard that will provide some alignment towards the larger ESRS. So quite a number of potential changes just around the 12 modules that are comprised of the ESRS today. We talked a little bit about double materiality assessment, and actually the next webinar in our 4-part CSRD series is really dedicated on double materiality assessment. So I certainly encourage our audience to sign up for that webinar. We know that double materiality is a cornerstone and will be kept in the CSRD regulation. However, with the connection between CSRD also being really focused on assessing and identifying impacts, risk, and opportunities, there is intended to be some simplification there. So keep an eye on that progress. In terms of climate and greenhouse gas reporting, Scope 3 is required under ESRS. It is one of the aspects of the CSRD that makes it more comprehensive and unique to some other greenhouse gas regulations in jurisdictions globally. And importantly, the ESRS climate module was developed in alignment with the International Sustainability Standards Board, or ISSB's climate risk reporting standard, which on the slide you'll see here referenced as the IFRS S2. Importantly, being proposed in terms of removal is the 1.5 degrees Celsius transition plan, which is required under CSRD, but required to be reported under CSRD. So that is also something in terms of climate and climate reporting to really keep an eye on. The CSRD has also been promoted under the Omnibus bill to have some simplification with the EU taxonomy. Really, these proposed changes are intended to reduce mandatory reporting pressure for companies that are in their climate transition. And so we'll have to look to see what those specific changes will end up being. And then again, with the connection with CSRD and CSRD, you know, they really are sister laws in the sense that CSRD does serve as the reporting function for CSRD where there is topic overlap. However, under CSRD, CSRD proposed changes under Omnibus, we're seeing a proposed removal of civil liabilities, and we're also seeing a major proposed reduction in scope that is really from across the value chain and value chain actors to really focusing on tier 1 suppliers. So there's quite a number of proposed changes that are very specific that we'll need to be keeping an eye on, and certainly companies right now are in a place of ambiguity. So what we want to do now is start to discuss a little bit of some practical steps that that we think may be pertinent for our listeners on the webinar. Marie, over to you to get started on these.
Right, yes. Thank you, Bonnie. Indeed, companies are clearly in a state of ambiguity, and yeah, however, we believe some dimensions remain pretty clear. If we look at practical steps, as an introduction, I think it's important to say that at SCS Consulting, we believe it is crucial to look at CSRD, and we've stated it a number of times now, not only from a reporting or compliance point of view, but also from a strategic and business perspective. Material topics remain material, and your company will not become less competitive or less relevant if it continues working hard on sustainability topics. So I think in a period of high uncertainty, as it is today, and now that the regulation seems to vanish away, a good way to think about ESG reporting and ESG related action plans could be, well, what's in it for my company? And here, I mean, simple questions could be like, can my company benefit from an increased transparency regarding impacts, risks, and opportunities? Would my company actually benefit from a renewed perspective regarding business continuity, regarding the resiliency of my supply chain, etc.? So that could be one way to look at it. Another way could be, well, do I have enough information to engage the necessary transition plans that surely will be requested when I have to report under CSRD or another framework, or that are anyway necessary to ensure the sustainability of the business. I think we can also look at these topics from a competition point of view, because there could be a question related to competitiveness of my company. How will CSRD or other voluntary reporting framework benefit my competitors? Will they have more information than me regarding the evolution of the market, the evolution of the supply chain, etc.? Will it give them strategic insights regarding how to shift their strategy or pivot their business model? Who knows? So is this gap in terms of information or insights going to impede my own business? And lastly, I would say, CSRD did not come up just like that. It came up because the objective was to answer needs of the whole ecosystem. So actually another question could be, what were the needs of my stakeholders that were fulfilled through CSRD and that today remain?
Marie, that is an excellent point that, reporting really does serve a critical role in stakeholder communication and engagement, including for investors and really providing decision-making data. For reporting companies under CSRD, we really we really see that wave 1 is a no-brainer. For wave 2, you might consider different options for delayed or changed reporting. But altogether, here is what we think companies should be considering in the near to medium time frame. With timing obviously depending on the finalized omnibus bill for certain companies, depending on where they fall within the thresholds. So this is a slide just showing a CSRD planning roadmap, and we've got it broken down into kind of 5 planning categories. First, governance preparedness. So the omnibus bill is certainly being proposed, and as Marie mentioned, there will be 2 different tracks. So following the progress, I think, will be very important for companies, particularly if you think you might fall into scope. Tracking other jurisdictional changes. So in the US, we have had a pause on the SEC's climate financial rule, but the California climate rule is moving forward. And so in the US, there is also a somewhat dynamic situation, maybe quite not as drastic as in the EU with regard to reporting. And other jurisdictions globally, particularly for public markets, have been passing required climate risk reporting laws. CSRD and value chain due diligence progress will be important to track as well. So not just tracking the omnibus bill progress with regard to CSRD, but also looking at what changes may come about for CSRD, since again, those are sister laws. The third webinar in our 4-part series is actually dedicated on this intersection. So we look forward to having you all back for that webinar. Next, really, it's an opportunity to strategize towards your opportunities. So for companies that look like they will be falling out of scope under CSRD, really there's the perhaps like breath of relief that less regulation may bring back and provide greater flexibility for those companies, and really providing an opportunity to leverage aspects of differentiation and really leverage competitiveness. However, we really do recommend to create a reporting roadmap. Why? Because even if your company is falling out of scope, many of your competitors may not be. And so they may be in a position of really reporting more comprehensive data points and essentially providing more information to broad stakeholders. So what can you do in this reporting roadmap? Assessing gaps and benchmarking, not just across your peers, but across some of the voluntary standards, and really getting a comprehensive view of where you sit. Strategic ESRS alignment. So, even if your company doesn't fall under required use of the standards, they're still there to be taken up and applied in a voluntary method. And what we tend to recommend for clients is to look for points of alignment. A lot of that, of course, is dependent on that materiality assessment. So looking at, even if you do not need to carry out a double materiality assessment, it certainly provides quite a bit of value to your company regardless. It's also a great time to really look at building robustness into the data and reporting systems and really getting those put into place so that your data eventually is able to walk down that path of achieving assurance. The Omnibus proposal, and particularly the Stop the Clock proposal, provides some time to really strengthen reporting muscles. And so how do you do that? Again, it kind of comes back to looking at not just the regulatory standards under ESRS, but looking at the voluntary standards. So it was discussed that the sector standards would no longer be developed. SASB is an existing voluntary standard system that has actually moved under the ISSB in recent years, but provides sector-specific standards really with a financial materiality focus. GRI also has some sector standards and general standards as well, and really provides impact reporting opportunities. So taken together, those 2 voluntary standards do continue to serve a very large purpose within this point of ambiguity between regulatory and voluntary. You know, we also want to keep in mind that many companies, particularly public companies, are really moving towards integrated reporting. And so their sustainability reporting function is not just serving, you know, let's call it the voluntary stakeholder community space, but really serves the purpose of providing investor-driven data. And then finally, assurance preparedness. The CSRD proposed changes under Omnibus might remove the requirement of a reasonable level of assurance and really stop at the limited level. However, there still is a multi-year kind of pathway towards achieving limited assurance across the scope of your reporting. And typically companies will start their assurance journey with a focus on greenhouse gas emissions and climate reporting. So doing a greenhouse gas inventory verification. Regardless of where you're at, we do recommend that companies plan for a multi-year pathway towards limited assurance. So these are kind of 5 steps and 5, you know, really just different buckets for companies to consider and to integrate into your CSRD planning roadmap. And that kind of wraps up the core of our technical content in the webinar. I would just like to remind everybody that this is the first webinar in a 4-part series. We really hope to have you back on April 16th for the do's and don'ts of double materiality assessments. The third webinar will again be focused on that intersection between CSRD and CSRD. We'll go deeper into the Omnibus bill, and we will cover any new developments on April 30th that might have come to pass within the next month. The final part in our series is really around building a robust and value-creating CSRD sustainability report. And so some of the aspects that we've touched on today around reporting and around planning, we'll go deeper into those in that webinar on May 14th. So we have wrapped up the 45-minute portion of the presentation, but we are able to stay on a little bit longer for questions. I do want to leave this slide here and so that our participants can grab my email address or Marie's email address if you have deeper questions or would like to engage. And once again, thank you so much for joining the webinar today. The presentation recording will be sent out to all registrants and attendees. And we have just a few minutes for questions. And excuse me, my voice is starting to leave me, I guess, just in time to end. So Marie, we have one question here, which I think will be excellent for you to answer. It's really asking, what are the next steps? So once the bill reaches Parliament and the Council, can specific changes be requested, or is it accepted or rejected in full?
Right, yeah, so, yeah, well, actually Parliament and Council will be free to make additional changes to the text, including, as I said earlier, beyond the current proposal. It's, you know, it's kind of reopened. So for instance, they could make changes to the thresholds. And we've touched upon that earlier. We've heard, I mean, we keep hearing the number of 500 employees as, you know, the potential threshold. So moving from currently 250 employees to 500 employees, but it could also be moving up to 1,200 employees, who knows? We have the guidelines of the European Commissions, but for the time being, it's a bit difficult to say where we will land. And so basically, they may accept or reject some or all of the Commission proposals as they see fit.
Great. My voice is starting to leave me.
Yes, I think we had a question on VSME, and so maybe we can, somebody has the question around VSME, maybe we can just touch upon this question before we close the webinar, and you completely lose your voice, Bonnie. So yeah, so VSME is kind of the new acronym that, you know, everybody has been hearing about now in the past months. So coming back to what it is a standard that was developed by EFRAG and was actually released, very recently released, and it's the voluntary scheme actually of reporting, and it was dedicated to companies that were actually not in the scope of CSRD. So company with less than 250 employees that are not part of the listed SMEs. So it's now proposed that it becomes kind of the default standard for companies that are not in the scope of the revised CSRD. And it's also proposed that it should act as a protective shield for these companies that are not in CSRD scope, with regards to data requirements from companies that are in the scope. Okay, so, but I think it's being debated, and it creates an issue because it is a very loose standard with, you have two modules, a basic and a comprehensive module, but a very limited number of data points. So of course you could say it's not about the number of data points, it's whether they are relevant or not. But since the one of the objectives is actually to create more proportional requirements for entities, you could ask whether it's kind of fair to request the same level of disclosures from a company with less than 250 employees and from a company with less than with let's say 900 employees. And if it's proportionate to go to move from an average of 500 data points that companies are disclosing on to less than 100. So I think this is the proposal at this stage, but I think VSME is likely to be strengthened, and I would encourage any company that's willing to engage into, is willing to look into VSME to also do a double materiality analysis. Double materiality assessment is not required within VSME, but I think this is really something that, beyond reporting, is going to give, the necessary strategic insights and really create value.
Great, thank you. And I see a related question here. What is the basic difference between the GRI indicators and the ESRS 12 modules? So, the GRI has been a long-standing voluntary standard, and the basic difference is GRI is a voluntary standard, and the ESRS are under the mandatory reporting. There have been there are some resources available for companies that are already looking at both that really show where there is alignment across the two standards. So for companies seeking to report to both, there's resources and guidance around that. There certainly was some review and integration from a topic level, and so if you look at both standards, you will find some similar themes, but they are managed completely separately and were developed with different intended uses in mind. Great. I just see one more question here. Can CSRD help specifically in with strategy for carbon reduction? So CSRD, the climate module under the European Sustainability Reporting Standards certainly represents a very comprehensive set of requirements that encompass carbon reduction strategy, including the 1.5 degree transition plan that we touched on earlier in the webinar, and really reporting on a progress towards any carbon emission reduction target. In terms of help in maintaining a strategy, there are certainly other components around that strategy that would fall out of just the reporting standard itself, but have very important touch points to that. So that is an area that we work in with our clients to help support them in setting and tracking progress against their emission reduction strategy over time. So I just want to put that out there. That certainly ESRS climate standard has the data points that you would need to be aware of, but in terms of building that strategy and executing on it, it would fall outside of the reporting standard itself, and be happy to talk more with you about that. Great. Well, I think that is it for our questions. And so I really want to thank you, Marie, for joining today and for the really valuable insights. And I would like to also thank the audience members who have stayed on to the end of the webinar. Thank you so much. Please, again, reach out to us if you have any questions or needs, and we will look forward to seeing you on the next webinar on April 30th. Great.
Exactly.
Thank you so much.
Bye.
Bye.